Thanks everybody for being here. It's an honor to be here in Delhi, speaking to all of you. Can I have a show of hands? How many entrepreneurs are in the room? Awesome. It's wonderful to see that. And how many folks that are VCs? Show of hands. Okay. All right, this is my favorite audience. It's entrepreneurs. And anyone wanting to start a startup that's not already started? Okay, a few. Great. Okay, without further ado, let me introduce myself. My name is Madhu. I am one of the managing partners at Rocketship.vc. Rocketship is, we are a early stage fund based in the Valley. We've got about I'm just going to use this mic here. Our AUM is $275 million across 3 funds. We are investing out of Fund 3 at the moment, which is a $125 million fund. Fund 1 was 40 million, Fund 2 was 100 million, and Fund 3 is about a $125 million fund. We started in 2014 to be precise. You know, I'll tell you the story about how we got to India in just a sec. You know, the fun fact is that we are accidental global investors. We are seed, Series A, and Series B investors, but mostly Series A and seeds. Mostly Series A's though, and we are global. You know, we are global fund, and we are also sector agnostic. So B2B, B2C, deep tech, we do it all. You know, some of our investments in India include Jar, Dhan, Khatabook, Apna, Mad Street Done, Yulu, you know, and a bunch of others. About 20 plus companies in India. We of course are based in the Valley. And so anytime you guys, any of you come to the Silicon Valley, please do say hello to us. And we are an outbound first fund. What does that mean? We are a fund that uses algorithms to find the best companies in the world. And we have petabytes of data, and on top of that data, we have you know, algorithms that are running, and our algos are the ones that found India. We were thinking that we were just going to be a US fund, and we just started seeing something magical pop up in our screens, and it was all India in 2015. So, you know, we invested in No Broker, in Moglix, in Mad Street Den, and Locus, and that was our first fund, and we just made a huge amount of investments in India, and it's not stopped since. You know, what that means really is that, you know, and some of the things that you'll see in the subsequent slides are not just like publicly available data, but it's some of our data as well. But what that means for us is that India is on a rise. It started in 10 years, you know, we've doubled from 1.7 trillion to a 3.6 trillion economy, and it's just going to continue to grow, we think. And the macroeconomic environment in India is really strong. You know, look, the stock markets have been rallying through most of 2023. It's not really showed any signs of a slowdown, unlike the rest of the world. And then there's obviously continued stability, a good regulatory environment, getting better and better. And, you know, I think the demographics are just awesome in India right now. You know, there's data, there's low data cost, there's a huge amount of penetration. The demographics are just ripe for disruption and to be disrupted. And so we can't really find a better sort of set of circumstances, along with the base of the talent, with great educational systems being sort of in the horizon. You know, and then following this macroeconomic sort of theme, what has happened is that the Indian VC ecosystem has followed that. The number of family offices and micro VCs that have been created just in the last few years in India has just been phenomenal. You know, if I look at the micro VCs with less than $30 million in their AUM, there's just been a huge blow up, you know, in terms of just early stage investors getting into the market. Just in 2021, a 15% growth in the number of micro VCs. Now, of course, what that really means is that there's a lot of early stage investments happening in India, rampant. Family offices have come into this fray. And so LPs, not just out in India, but outside India, and I'll talk about that later, but outside India also are hugely interested in India. That just means that money is going to be pouring into this environment if there is a good, steady state of great startups and founders, which we believe there is. So family offices participating, direct investments as well, not just in micro VCs, which is a great news for a robust ecosystem, and founders should be excited by that it's not just VCs, but it's family offices and strategic investors wanting to directly invest. And the deal sizes are huge. You can read the numbers. It's $400 million plus. These are not small numbers for an ecosystem that has grown so quickly. Lots of high net worth individual money coming in. Some of the new micro VCs, Capital A, Fair Angels, just a whole host of them. And then, of course, the India family offices that are very active, the Marivella family, the Damani family, scores of others. However, what's happened in the last 1 year is that there's a lot of dry powder, about $3 to $5 billion. Actually, 6 is the last number. $3 to $6 billion floating in this, in this ecosystem, and it's not being deployed. What does that really mean? 2022 was a boom year for fundraising, and so lots of funds are sitting on a lot of money. They've raised, but they're not deploying that money. And so, what does that really bode for the startup ecosystem? So there's a lot of dry powder in the ecosystem, and the gap is really significant in later stage, because the early stage, there is still a lot of investment and a lot of interest in investing in great companies. And what has really happened is the 2021 valuation market has caused everybody to be really worried, because the valuations went out of whack. I'm preaching to the choir, you all know that. And most active late-stage investors, be it SoftBank or AlphaWave or Insight, they've not even done a single deal in 2023. That's stark. That's really stark, that they have not participated in a single deal in 2023. And no unicorns have also been minted in the last 10 months. It's just been really, really quiet. So, following that slide, it really is that exit momentums have greatly stalled in India. And the mergers and acquisitions climate is sort of weak. It's continued to decrease in the second half of 2022. And mostly there's a lot of activity only in B2B, deep tech, and I'll get to that slide, but there's a lot of consolidation happening because deep tech is still new. Fintech and SaaS is where the consolidation has happened. The one thing I want to point out, and I'll just be a little bit of a black sheep, if you will, not many people talk about this, but in the US, corporates are a huge acquirer. There's a lot of M&A and acquisition activity that happens with corporates acquiring companies. There's not that appetite in India for corporates to acquire startups. That should change, that must change, and as founders, you have to be the people that sort of drive that change, because it's really a very stark thing that no corporates are in the market to be acquiring great startups. They feel like, I don't know what it is, they feel like they'll build it themselves because the talent is cheap here. There's a multitude of reasons, but it is a big difference between the rest of the world and India that corporates are not stepping up to do as much acquisition as they should. And only one major startup IPO happened in 2023, and all of the mega deals, secondary sales, all of that has sort of, the activity has greatly reduced. So, what really that means is that in the exit momentum has really stalled, which we think is going to recover with, a lot of upcoming IPOs. Now, this is my personal list. I'm not representing anybody here, but I think that all of these, and there's just some examples of companies that are waiting in the pipeline for IPOs. Some of them, you're going to be seeing some here as well. Mama Earth, Ola and Oyo and Swiggy, and there's just so many big names. And then there are also some very well-established names, and then there are some newer names like Mamaearth, Paymate, and things like that. The top sectors continue to be the usual suspects. Like I just said, fintech is a huge sector. Enterprise SaaS, they all continue on to be 70+% of the deal value. Now, there has been a little bit of a cool down from these high burn models, these D2C consumer tech. It was just huge, a couple years ago, and that is, I think that's slowed down quite a bit. You can't just, people are now wanting, not just people, I think it's founders, it's investors, it's the larger ecosystem. People just don't want to throw money at the problem. They want founders to build, but they want founders to build with a strong unit economics in place, and that's come about, and we think that it's a secular trend. We think that it's a trend that shows, and that actually really means that this is just growing pains of a maturing ecosystem, and that's a really good sign according to a lot of us. Now, the one thing that has happened is that there's a lot of very interesting activity happening in some interesting sectors. No surprises here. Gen AI and predictive AI. Lots more in the Valley, but a lot of very, very good companies in India too that we have personally spoken to and we are excited about. EVs and adjacent sectors, batteries, charging, etc. And then, of course, you have deep tech. And deep tech is wide, but a couple examples here: space, defense, robotics, things like that. And then, of course, sustainability and clean tech. That's obviously a really important one, because ESG and clean energy are here to stay. They're growing rapidly in India, they're growing rapidly in the world, but it's really leaked down to India. And it's gone from a mind share to wallet share. That's what this graph's takeaway really is, that if you see the numbers here, the growth, the CAGR, all of the average deal sizes, really tells you that they've put their money where their mouth is, and it's gone from a mind share to the wallet share. And look, what has really happened in India, which all of us global investors are really excited about, is that the founder profiles are just phenomenal. And I don't say it because you're all founders in the room. There is something magical about Indian founders that is only, I believe, and it's my personal opinion again, I believe that's only found in a few really coveted ecosystems like Silicon Valley, and I think Indian founders are compelling. It's spread. More than 50% of the deals in 2022 were outside of like the major tech known hubs like Delhi and Bangalore. It's out of there. It's now across India. And then of course there are repeat founders. There's mafias of companies. People come out of Flipkart. People come out of other bigger companies, and now they are beginning to sort of. It was like the PayPal mafia in the Valley. Now people are coming out of great companies and founding other startups of their own. Look, I think some news to abet all the excitement. Deal terms are still evolving because the current landscape is still a little hard. There's a lot of interim rounds. There's round extensions. There is preemption from existing investors. There is safes and convertibles to extend runway, to just kind of couch yourself from getting valuations that are not optimal. And then there is a very important topic which I think all of you will be aware of, which is corporate governance. And this again, I will say that this is just growing pains of a maturing ecosystem, and not to be taken with a lot of. I think this is growing pains because this is an extraordinarily evolving ecosystem that's going to mature very soon. And these are the growth pains, which is the corporate governance issues that we've seen in India. Of course, high-profile misreporting cases, so on and so forth. Again, this all goes back to the world is watching, the world is wanting to invest. LPs are interested, global VCs are interested. And like I said again, I wouldn't I wouldn't sort of like stress too much on this and get all our hopes down. It really is just, we just all need to sort of go through this and get out of it. And again, this next point that I have written is that it's not got too much of an impact on the ecosystem. I think there's just a lot of great founders who are not going to be pulled back by anything, especially in the earlier stages as well. It's a great green shoot area of extraordinary talent, extraordinarily compelling opportunities. And I think the government is, and I think it's here to stay. This regulatory environment is going to be matching up on the, how do you kind of make the exits better, right? You have to, there has to be an entire feedback cycle, and the exits is a big part of it. So how do you kind of find strong exit ecosystems? IPO is a big thing, so we are cleaning up our ecosystem, so that we can get much better when we have many more startups that are flush. And the startup ecosystem is transforming. To my earlier point, there's low data costs, there's great digital infrastructure for public good, there is Aadhaar and UPI and ONDC. There's just a great infrastructure, fundamental layer, large aspirational consumer base, great software companies that are world-class, really. And then, of course, what I call the more formal economy, alludes to the regulatory landscape, the attention to detail about the IPO market, the attention to detail about sort of, making sure that there's some progress, there is a bias to action, and that is good because it's, the economy is getting formalized now. And then, of course, again, very closely correlated point, some regulatory overhauls as well, where it's required and appropriate. And this is our advice to founders. I should say my advice to founders on a macro level. And whenever I'm completely only talking about India, because I am a global investor. I've invested in the Valley, in Europe, in LATAM, in Southeast Asia, of course in India as well. But this is my advice to Indian founders on the macro level, which is, we have a lot of problems, and that really just means a lot of opportunities. What do I mean by that? Examples, electricity is constantly going. What are the alternative ways of, producing electricity and, the alternative sources? There's a lot of pollution, EVs. India has a lot of problems, but then it's just got a lot of solutions as well. And that's why, Khata Book, one of our portfolio companies, there is a lot of, there's a lot of competitors in the Western world, QuickBooks from Intuit being one. But India really didn't have, and it still doesn't have a lot of things. So there's just still a lot of opportunities present in India to build for India and beyond. And look, everybody is excited because in India, the next thing is such a large market that if you get to PMF and you do a lot of experimentation and testing, you get to rapid growth and then you can scale it massively. Just we have a company here called Moglix out of Delhi. They are now going to Southeast Asia, to Middle East, to US. Guess why everybody is excited by them? Lots of reasons, but one big reason, because they have at scale, tested, and they have done so much of rapid experimentation, and they're doing millions of transactions in India. That is not small, and that number is so large that the US customers and, global customers are excited that these guys have done everything at scale, and, so the adoption is going to be so easy. And that India does allow that, not just for India, but, India building for the world as well. Of course, helpful demographics, educated, great informed talent, and customers, world-class companies, which leads to top-notch talent and infra and so on and so forth. And then access to capital. I would say that, for the budding entrepreneurs in the room, for all of you entrepreneurs, the time to really be, founding a company or have already founded a company is now. And I'll say this, again, not part of my script, but I'll just say it because, we all love giving our, advice because I have also been an operator. But I think that, at the lowest points is when great companies have been founded. You all know this, Facebook and, and Google. These are all coming out from like the worst times. 2000, 2006, 2007, So, following just that, it's a great time, and it's a great time for India. It's like a perfect storm to do the best things. And our advice to founders on a micro level, don't aim to just survive. I think a lot of founders make this mistake. They have like 5 million in the bank, and this is a bad time, it's a winter, so you just kind of like huddle down and you don't want to spend the money, and you just want to like, be batting at like really a low run, it's just you're batting once. You shouldn't do that. When you have, I think if you come out after 2 years just surviving, the one thing that I know from my operating experience, and my partners also feel the same way, is that when you come out, you're going to have competition, and you would have already been obliterated. So there is no reason to just sort of hunker down and be in a survival mode. You should try and thrive. You should try and take, advantage of the opportunities that you have. And you should not be too conservative with the money. I know this is extremely counterintuitive advice to what you might have heard somewhere else, but we truly believe that if you come down just like limping on the other side of this year or these 2 years, it's not as good as you should have probably done much more. So therefore, continue to invest in growth cautiously, both product and GTM during this period, as difficult as it is. Retain the edge over competition, and survival is not sufficient. I think I've said this enough. Don't anchor yourself on 2022 valuations and comparators. And I think that raising a little bit to continue driving the growth is really important. I do think that I've seen some people who just have enough to just kind of get through, and then some others who have a lot of money in the bank and they're just satisfied. But just enough, and they say, hey, but I don't need to raise. But you should just be acting as if you are in any other market or any other sort of time, which is to push all the levers to do the most important things to you to get ahead of your competition, so that in the next year or next 2 years, when the environment gets better, you are the clear leader. And this too shall pass. We've all been through recessions. We've been through 3 recessions. Yes, I am that old, almost. We are excited. Again, the last thing I'll say is that we are extraordinarily excited to be in India, investing in India. Our algorithms continue to show India strongly. We are investing, we are talking to companies. Our bar is, of course, high, but we are talking to many companies. There's strong macroeconomic conditions in India. India has many, many great founders and investors. And so the time is really now where, it matters. It's not just founders' problems that corporate governance is an issue, or it is the entire ecosystem's burden. And so it's not enough for us to have great founders. You also got to have informed investors, and all of us investors get better every day, try to at least learn from founders. It's a feedback cycle. It's a partnership, it's a marriage in many ways. You give money to a founder for the long haul, and we learn from each other. And we are proud to be in 20+ companies in India, and we are going to continue to do many more. And we support our founders with their growth aspirations, and we continue to ask them to be conservative and cautious, but pull the levers when you have to, and don't be afraid. And don't just try to survive, but try to thrive. And with that, I will end this presentation. I am so happy to be here in Delhi, and to have, I love coming to India every 3 months, and it's just wonderful to see so many familiar faces, unfamiliar faces, and we will be here for a long time, Rocketship. And please reach out to us. Please visit our website, www.rocketship.vc. Check out our portfolio companies, and we hope to speak to all of you sometime soon. Thank you.